Joe, what first got you interested in real estate investing and how has your investment philosophy evolved over time?
Yeah, it's an interesting question, Pete. So initially, as I think many people do, got started managing a single family house and with some sweat equity and managing it myself over the course of time. No doubt, understood a greater importance of having a team approach to it, not just myself, but you need help in solving the inevitable problems. It's not just the plumber or what have you, but finding a good property management team as well. Um, the need for having reserves or a war chest built up because things happen, and you need to plan on something happening at some point that you're going to need those reserves for. Other things, I'm a much I have a much greater appreciation for the patience of buying and holding, and potentially, whether it's refinancing out and generating the infinite returns. Other things, topics for another time. Real estate cycles, the use of other people's money, and of course, inflation and compounding interest as well. So, great questions.
What characteristics in a real estate investment cause that investment to stand out to you early in your due diligence process in a positive way?
I think about how can I create a greater demand for a particular property. Obviously, we want to be looking at properties that are in a place where there's increasing population. Crime is not a significant issue, although that's becoming more and more important. Looking at the crime piece, and then incoming business growth as well. You want to look for incoming revenue into a specific area or zip code as well. So. Um, the other things that stand out are the price per square foot. Where does it relate versus construction costs? And then considering how we can force appreciation on a particular product, but increasing tenants or making value add propositions or adjustments to the property as well. And then it's always interesting to factor in, keeping an eye out for properties where the management team or individuals, the owners have become complacent. So there's obvious problems that we can solve and basically turn that into forced appreciation as well.
How do you balance risk and return when evaluating a real estate investment?
Number one in my mind is evaluating very conservatively from the perspective is that I have my own skin in the game. That's important because I think that changes my attitude. At least, we have a red team that we get another set of eyes, at least one other set of eyes on a particular property, ideally with more experience even than what I have. And always thinking about, creating a list. What are 5 to 10 things that could go wrong, and then ultimately, in dealing with other people's money, making under promising and over delivering. Dare I say? It sounds cliche, but it's a fundamental principle in terms of how I operate.
What lessons from past investments have had the biggest impact on how you invest today?
Uh, that's fun to think about. Fun in a not so fun way sometimes, but it plays a role in how I think currently. The patience of buy and hold, not selling too early. That can be sometimes tough to do. Not necessarily timing the cycle or the market per se, but holding on, and it's a constant process of studying that process of holding on for the longer term, and then ultimately, as I had mentioned, thinking about and executing refinancing out some of that capital as well.
How do you approach due diligence when committing capital to a new opportunity?
Again, going back to, I'll have skin in the game. I think that changes the attitude and the approach to everything that we do. Assessing for those 5 to 10 things that could go wrong. You think about what's going on right now. There's a lot of focus on interest rates and then creating demand versus other properties that we may be competing against or in the same geographical area. and then going back to our red team, running the idea past another set of eyes. Even ideally people that have more experience that we have on our team, but also underwriting quickly. Speed is of the essence in the real estate game these days. But then not necessarily relying 100% on your underwriting, making sure you go back and verify when it comes to the utilization of artificial intelligence or AI, has become so prevalent in this current market.
What trends are you seeing in the real estate markets today that you believe investors should understand?
Again, going back to AI, fundamentally, AI wants us to like it, but we need to verify the output. You really need to press back, almost with resistance, ask for counter arguments or what could go wrong and why. The other piece is that there's a lot of private equity moving into the real estate space, whether it's commercial or residential. Not enough due diligence completed, and false assumptions. We're entering a time where the predictability of interest rates is going to come back to be an issue for a lot of properties that were put under contract in the last 5 to 7 years. Again, the experience in fixing problems, and that forced appreciation may take some more time, and thinking about how we can also position ourselves versus what the current construction cost for new construction would be.
How do macroeconomic factors such as inflation and interest rates impact your investment decisions?
That's a very timely question, obviously for where we are right now in 2026. But we actually have pretty decent interest rates right now if you compare them versus the last 30 or 40 years. But going back to those macro economic factors, we want to have cash flow on day one, or a very strong creation play based upon not only our underwriters but our years of experience in the field of construction, and assets that have been developed over the years. We are beginning another real estate cycle from, dare I say, towards the bottom of that cycle. And actually, going back to the essence of the macroeconomics, inflation can actually be our friend. So we are coming into a time where it's actually a great time to be buying.
What qualities do you look for in the management teams and operators that you work with?
One of the main things is, looking at tell me about a few mistakes that you've made over the years, and your lessons learned. Obviously you want to do a cross check of references, deep dive into people, because there's always risk out there everywhere. So how do we mitigate that risk even internally within our management teams? But really that process of not only how people are thinking, but talking through some of those mistakes or missed opportunities, however you want to look at it, and lessons learned from the past.
How do you think about creating in long-term value in the properties that you've acquired?
Um, I think you're a hedge fund guy, if I'm not mistaken. But going back to buying low and selling high, so you make money on the purchase, as they say. So creating again, I think that the piece you want to add to that is, from a real estate perspective, thinking about how I can create a space that I would want to rent or live in as well. So, beginning with the end in mind, and creating something or purchasing something that where I'd want to live as well.
Within real estate, what parts of the industry do you find most attractive, and what makes them attractive today?
Very, very interesting question. The Class A office space, multifamily in the Class A space, thinking, about those two particular sectors, face-to-face workspace. Although, with the advent and the implementation of artificial intelligence, being able to do a lot of the work, or even accentuate the work that we do, as a culture, as a country, or a globe, there is going, and I think we're going to continually find that there's a greater demand for face-to-face interaction, not necessarily, on a virtual screen all the time. You still need to get those teams together in the same room and talk through what's going on, as well as in the multifamily space. We're kind of moving towards more of a renter nation, with regard to disposable income and job growth, not only job growth, but wage growth. Things with rising inflation, I think we're going to see more of a need for spaces where people are wanting to rent. It's not going to be exclusive, anywhere near 100%. I still live in a single family home, but I could see, wandering around in various cities where there is a potential strong desire, actually, for Class A office space and wanting to rent as opposed to having to own. It goes back to thinking about what are people going to need in 5 to 7 years, and where the trends are headed. I think going back to, that client demand piece, how can we increase demand for a particular piece of property?
How has your background outside of real estate influenced your approach to real estate investing?
I have a pretty significant background, physician working in the pharmaceutical and medical sales world, working with people. So how can one, whether it's answering a question or engaging with individuals, how can you quickly establish trust and kind of keep that ball rolling, where you become a resource for trusted information, dare I say. Always thinking about risk. It's in some ways it's similar, but in other ways it's a little different. But how do individuals, in that high net worth grouping, or individuals in general, how are they evaluating risk? So being able to meet new people, something I've been actively involved with for a while before really jumping into the commercial real estate game in a bigger way. So I guess the essence of what I'm saying is the ability to create a good and foster a good face-to-face engagement or interaction.
What role does discipline play in deciding whether to invest in a property or to walk away?
Again, what comes to mind is thinking about the artificial intelligence, and taking the time for the due diligence. It's so no doubt it plays a role in the underwriting in a quick way, being able to make decisions quicker in terms of the initial underwriting process, but having the discipline to go back and evaluate, what am I potentially overlooking, taking that emotion out of the decision, and rethinking, not only the speed, but what are the numbers saying, thinking about what can go wrong, bouncing the plan or the strategy off not only business partners, but actually my wife's pretty good at not only keeping me in check, but I think having conversations about what your strategy is with other individuals, it really gets the brain thinking, and whether it's the answer or question someone else asks, or it's something internally going on in my own process of evaluation. I think having the discipline to go through that process, rather than necessarily relying on gut instinct all the time.
How do you manage uncertainty during periods of market volatility?
Obviously, reading about what's going on in any particular sector or the environment, hearing how others are managing risk and the volatility piece, to some extent, if you think about where we are now, there's a lot lot of chaos going on out there, and being able to extract yourself from that emotionally and go back to fundamental basics and evaluating your original plan, the foundations upon which your assumptions have been laid out, and how those numbers, again, thinking about evaluating and having others evaluate what your strategy is, the numbers that they're seeing, and just generating questions, having that two-way dialogue back and forth about what you're seeing and why you're seeing it.
What are some common misconceptions that people have about professional real estate investing?
That's interesting. One, that it's easy, or two, that it's passive. Even if you're taking more of a passive route, you're going to have skin in the game too. So you want to really, vet the track record of the team and the individuals that you're going to be working with. Risk is everywhere. So I won't mention the person's name, but recently came across, they do a deep dive on everyone that they're working with, and I can see the value in that, because it can only be one or two mistakes that can lead to profound negative implications. So really, not only vetting the trust that you have in the individuals or the teams or the companies that you're working with, because that can have a downstream effect on the impressions of the work there that I do as well. So, great question.
What operational improvements have you found tend to create the most value in real estate investing after you acquire a property?
Experience, no doubt. Experience with problem solving. I'm going back to that. Tell me about 3 to 5 problems that you've dealt with, and the outcomes that hopefully have turned around towards a positive. But really digging into some of the things that you weren't able to change, that maybe just were able to limit your loss in a certain area, or the negative effect of a particular impact. But yeah.
What investment over your career taught you the most about risk management?
I think studying, and hearing how other people approach risk. It's very interesting. You'll pick up different pieces from different individuals. Even if it's in something that's totally unrelated. Some point, we could have that dialogue. How was someone in the hedge fund area, approach risk? And while that may not necessarily be directly applicable on the surface level, I think, hearing how other people approach risk, why, is very important. Teaches me things continually. I'm constantly learning about, even as the cycles evolve, the economy evolves, how others are approaching risk, and potential solutions to those issues.
For someone looking to become a better real estate investor, what skills do you recommend they develop first?
I would say, evaluating, problem solving, and how they've approached that, because things are going to happen that need to be solved, as they say, and by how to execute that or learn that skill. I think there's plenty of different mentors or individuals that, whether you follow their process or follow it, 100%, using it as a basic pathway for how to think about whatever sector you're going to, initially jump into. I think starting on a small level, for me, I always bought into, having my own home and starting from there, moving into a second one, but keeping the first one. And you learn a lot of principles that apply or transfer over to other sectors, or property types, at least in the real estate world. But they've also impacted, how I think about investing or construction of a portfolio. as well. So mentors.
As you look over the next 5 years, what are some emerging trends in the real estate space that you're most excited to continue researching and learning about?
That's interesting. So um, it may not necessarily seem directly applicable, but a recent book, I'll hold that up, Dollars, Gold, and Bitcoin, that I've read through, and how the Federal Reserve interacts and dare I say protects the world's reserve currency, the U.S. dollar, and how that influences in various ways our business cycles. That's always been an interest of mine, and stumbling across that book, I feel compelled to show that up there, though. But the other piece is not only the economics but the inflation and taxes, how that influences the cycles, how one can leverage the inflation. I actually think that that's potentially it can be one's friend if you're positioning yourself appropriately. And again, going back to constant process, I'm by no means an expert, or I'm very much a novice in artificial intelligence, but learning how that works, and then how I can implement in my daily life, my W-2 job, as well as my investment career, and how to appropriately adjust one's portfolio as well. But yeah, I like asking people a question. At some point, I'll get around to asking you. What have been your one or two favorite partnerships or investments, and why that is, even if it's something outside of my area of expertise. I think learning how people think about that and position themselves for what they're going to need, in 3 to 5 years, is always an interesting conversation. And there's usually one or two things I can learn from that. So, yeah, that's my answer to that one.
Got it. Yeah, I'll answer your question. Two favorite investments I made. One is and I'll spell it phonetically since audio quality can sometimes be bad on a recording. Victor Tango India and Victor X-Ray Uniform Sierra. Those are the Vanguard Total U.S. Stock Market ETF and the Vanguard Total World Market ex-US ETF. They're both equity exchange traded funds, market cap weighted, float adjusted, that track their indices with very minimal tracking error, and they have very low expense ratios. I think the American stock market one has an expense ratio of something like 3 basis points a year. The international has, 5 basis points a year, both very low. And they basically give you exposure to a global investment in capitalism when you buy and hold them, as I have for about the past 9 and change years. So I've gotten a decent result with that. Those are probably my two favorite.
So, that's interesting, because you're factoring in not only, the US here, but a global perspective on investing. And that's an area that I'd love to learn more about, as potential more global based real estate investing as well. I'm sure a lot of basic principles would translate, but who wouldn't want to someday own a villa in Italy, right? So